Dear students, uh, today we are going to discuss illustration 8. In this illustration, uh, they're asking us to prepare trading and profit and loss account and a balance sheet for the year ended 31st of March 2017. Okay, so we have to prepare one trading and profit and loss account and balance sheet. So already we discussed account and balance sheet also. Okay, so if you haven't listened that class when we discussed the format of these accounts, so first of all you listen that class clearly and get understand what are the accounts are coming in trading account and profit and loss account and how we can prepare one balance sheet. These all things you get understand first watching our previous video, and then after that you start watching this video. Okay, in this question uh, so many accounts and its balance given. Okay, and each and every item where we have to write, we are discussing that one. First they have given carriage on goods purchased. So carriage expense, that means goods, the expense we spend for carrying the goods. Okay, carrying the goods sometimes from the place of buyer to the factory, or to the factory to the buyer, like that the goods should be carried. Then for that we have to spend some money, that is carriage expense. Here we spend some money on carriage sorry uh, on purchasing time. That means before the goods manufacturing we are spending this money, that's why it is direct expense. So trading account, we have to post this amount in the trading account. Okay, carriage on goods on goods sold. Carriage on goods sold, that means it's a indirect expense. Indirect expense always goes to profit and loss account. Direct expense always goes to trading account. Okay, keep in mind this thing. So carriage on goods sold, that is indirect expense, goes to the debit side or expense side of the profit and loss account. Manufacturing expense 42,000, trading account we have to post. Advertisement is an indirect expense. Okay, after the manufacturing goods we are giving advertisement, and is a part of the promotion of the goods, so it is indirect expense. And excise duty is also indirect expense. Factory lighting, factory expense, factory lighting, that is manufacturing expense. Trading account we have to taken this account into the trading account. Debtors and creditors. Debtors are the people who owes to us. That means debtors are asset to the firm. So balance sheet asset side it will come. And creditors, that means the firm owes to give money to the other people, that is creditors. So creditors are we are writing creditors account on the liability side of the capital account. Dock and clearing charges are direct expense. Okay, direct expense. And postage and telegram are indirect expense, goes to the P&L account. Fire insurance premium, indirect expense. Patent is asset, balance sheet asset side it will be. And income tax is not a firm's expense. Firm is not liable to pay income tax. The owner of the firm, is liable to pay income tax. That's why this must be deducted from his own investment, his own capital. Okay, and firm is not liable to pay the income tax. And office expense 7,200. Office expense is indirect expense. It goes to the P&L account. Bank over cash in hand. Cash in hand is the asset, liquid asset. Okay, that is goes to the balance sheet of the asset side of the balance sheet. Bank overdraft is liability. Bank of overdraft is a liability, uh, just like a loan. And the motor car is asset. Drawing is the owner withdraw the money, so it must be deducted from the capital account of the owner. Capital account, we have to show in the liability side of the balance sheet. Audit fees or indirect expense. Plant is asset, and repairs to the plant is expense, indirect expense. Stock at the end, closing stock is an asset. Here you may get one doubt. In the format you can understand that it is clearly written, closing stock is shown on the trading account as well as the asset side of the balance sheet. These two area. When we are taking this closing stock into area, that is, closing stock is given. Closing stock is not given in the trial balance. It is given as an adjustment after the trial balance. There is some adjustment will be given. Then only we have to write this stock at the end or close stock in the trading account. Otherwise, in the trial balance, the close stock is given. Then you have to write only on asset side of the balance sheet, and not in the trading account. Okay, and purchase less return. Purchase account is a trading account. Okay, trading account format, opening stock first, then purchase less purchase return, like that it is going on. So purchase less return, already they deducted the purchase return from purchase and given 1,60,000 rupees. Commission on purchase also there in the trading account. And incidental trade expense. In the indirect expense, investment is an asset, interest on investment and indirect income, and capital is liability side of the balance sheet. Sales return in the trading account, credit side, and sales tax paid. Sales tax paid is indirect expense, and discount on purchase. Discount allowed is an indirect expense. Okay, discount allowed is an indirect expense. And discount on purchase. Discount on purchase means while purchasing we get some discount, means it's an income. When we purchase, somebody give discount, then it's the income to us. Like, but some people, when we sell goods, then we give some discount, then that is an expense. Okay, discount some purchasing time, when we get the discount, that is income. Sales time, when we give the discount, that is expense. Okay, then here you see trading account. First part is trading account. Purchase less return, commission on purchase, carriage on goods purchased, and manufacturing expenses, factory lighting, dock charge, sales return, credit side. Then balance. After balancing, we get gross profit CD 2,98,400, which is transferred to the profit and loss account. 2,98,400 transferred gross profit BD. Then all the other indirect expense and incomes written on the P&L account. See here, all the incomes and expenses written. Then again we are balancing. Then we got the last net profit. That amount is transferred to the capital account. Okay, then balance sheet. Balance sheet, two sides are there in balance sheet. One side is asset, we are writing the assets. Another side liabilities, we are writing liabilities on the liability side. Okay, and here cash in hand, debtors, closing stock, investment, motor car, plant, patents, these all things. So for IT, these all things, you whenever you see one account, you have to understand that what is that one. It is expense, it is income, direct expense or direct income, or assets or liability. You have to understand this. Each and every account you have to understand what is that one. Okay, that means in shortly we can say you must be familiar to this all the accounts. Okay, then only you can do this question. Uh, so for that purpose, you have to practice more and more questions. So whenever you see one account, you can understand that where we have to write this one. Okay, that means more and more question you do, you will become more and more familiar to these all the accounts. And liability side, you see bank overdraft, creditors, then capital account, add the net profit, less drawing, less income tax. Then after that, when you add this liability side and asset side, both sides should be equal. Okay, then only you can understand the entire process you have done is correct. Okay, balance sheet should be balanced while adding both sides. Okay.